What's up, everyone? JC here from Investagrams. This is a follow-up video on our recent discussion on potential warning signs in the global markets. We're going to discuss on the charts what's going to happen next and how can we prepare for the potential correction if ever there's a deeper one to come. So let's begin. So here, let's start by looking at the broader market, S&P 500. So in my last video, I highlighted the importance of this gap resistance around the 190, 32 level, right? And the market seems to really be having a hard time to break that level as seen here. And now we broke down the 5-day range at this point. And now we seem to be losing short-term momentum, breaking below EMA 20. And we're at the next test, which is at the 50-day moving average and the 3,000 support level. Okay, so this next range that we're looking at would be a critical one if the market breaks down past 3,000 and in this EMA 50 level easily, then that tells a lot about what to expect in the future. So initially, the levels that I'm looking at would be a correction around this area, 28 plus, but that's just the initial. If ever there's a bigger negative catalyst in the global markets, then there's possibility that we may even retest around the 25 plus area. Okay, but that's a longer term view, of course. So we just need to prepare. If the market breaks 3,000, then there's a high probability of revisiting 28 plus. So to put that into perspective, there's a potential 4 to 5% correction, which is very likely as well, because last day we saw a 2% plus drop in the Nasdaq and Dow Jones. Okay, so we're at 3,009 today. We need to see what's going to happen in the 3,000 area. Are we going to break down easily, or is there going to be support at that point? Okay, now if we look at Nasdaq, it's the same thing. Actually, the main warning sign that I identified here, why I became cautious in my stance, is if we look at the RSI, there's a major divergence forming. Look at the RSI closely. Market making new highs, but our momentum indicator failing to make new highs. And then there's the bigger one, but then you see here in the shorter term, in the last around 15, 20 candles, it tried to make a newer high above the 10,000 level, but the RSI failed to sustain RSI 70. All right, hang on. All right, so even though there are tons of tech stocks gaining solid traction with the new normal coming after going after the post-lockdown environment, there would be tons of technology names benefiting from the new environment, of course, but the market may be telling us that there may be something deeper ahead. We may be facing a bigger negative catalyst. Okay, so it's not just about Corona. Maybe we've been distracted by that, and there may be other economic implications of what's coming ahead. All right. So how would I approach this scenario? Me personally, I trade the Philippines. So in the Philippines, I'm not exposed in traditional blue chip stocks anymore. So I'm about 50% in cash in the Philippines. So So I'm in a lightweight mode. So I'm just holding into stocks that have really a specific theme on them, or they have the potential to be an outlier. So that's my main suggestion. If you're still gonna keep some of your stocks, just make sure that these are the strong names you're sticking with, whether you're trading Philippines, USA, and other markets. But then on the other hand, I already established my shorts as well. So coming from my previous bearish position, I have a short position just to hedge me. So if ever the market continues to crash, my portfolio is gonna benefit if the index goes deeper. So I'm also short a few tech stocks that I think are overstretched or are kind of weak in the future. So that's my main approach from here. But of course, though I'm sitting in profits right now coming from my shorts, I started shorting at the 3,100 level, but it still hasn't gone too far off, right? That's just around 90 points at 3,009. So I'm still cautious. If the market suddenly picks up with strength at the 2,950, 3,000 level, creates a hammer above that, then I could easily cover my shorts. So I'm still going to be nimble on my feet. Okay, right now we're medium term, we're still in this uptrend, but we're at the critical point. So that's something we have to remember. So in the next week, it's basically do or die or a critical stage. And we're going to see what's going to happen in the markets in the next 1 to 3 days. So the key here is to be adaptable. Whatever the market throws at us, you should be prepared and not complacent. So having this warning sign or showing you my analysis of a potential breakdown in the global markets in the USA doesn't mean that you have to run away easily, right? We can still have our investments, we can still ride some trends, but we have to have that mindset that from here on we have to be more careful. Okay, so I hope that this video helped, and I actually discussed my execution on these trades in the upcoming Investa Summit. So the first day started today. If you want to check that out, you can visit our website, investagrams.com/investasummit. So that's all for our video today, and stay safe out there.